The luck you have in the market takes a lot of work. Yes, yes, a lot of work. Yes, a lot of work. Hey, beautiful, Shaz, beautiful. Like I was saying, when there's volatility, these things happen. These if it's even scheduled to come up top here, you're gonna see that with the wicks, but you're not gonna see that in structure. It's not gonna give you this smooth pullback going back into, whatever area you're expecting. It's not gonna give you that. With volatility, you're not gonna get that. So you can be on the wrong side of the market quickly because you get caught in that volatility without understanding what the targets actually are. So we took out yesterday's high right here. What did I talk about with daily targets? Daily targets, they tend to trade to wherever those targets are. So with here, even though this candle has not been closed yet, you still now have a fractal. Even though these candles haven't been closed. So now what do you do with the fractal? You set some alerts there because you know they're from the daily. So anytime there's like this huge ferocious move that comes out of somewhere that you're trying to quickly scalp, okay, hold up, I'm in a higher time territory. There could be a spike that comes that's unexplainable, Even if this candle is a bullish candle and it ends up as a large red bearish candle to the downside, coming back into this. Well, you see it went to that 30, drew right back to it. Even if it's coming down to this higher time frame fractal here, this higher time frame fractal, even if it's coming back down to this, coming back to touch this, whatever it is, let's say this candle ends up going from bullish to bearish, it's still going to come and tap these areas and give the same kind of thing in these areas. Because what? A zone was validated the minute we traded up above that. And this whole candle from this high to this low down here, that swing high, swing low thing, sorry, everybody's fibbing it. Fibbing it because it got to come back into the golden zone. Bum, 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 And they're what? Waiting for it to come back into the golden zone, placing their stop behind here, and then what? Clap! Stop is gone. Because they're doing this swing high, swing low stuff and not really understanding how to follow price. This is a large hidden S&D on the higher time frame. So a lot of the times, remember what we said, we can get a hidden S&D, and then you can see price drop back to run the low of that hidden S&D. But then there are also times where what do we say NASDAQ tends to do? NASDAQ tends to create a fractal somewhere in here. It could also be this here, where on the 1 minute, you see us bounce on it multiple times. And then we go to take a high, and then we come back and run those lows there. We see that on a 1 minute a lot. So if you see that on a 1 minute a lot, it's also going to occur on the daily as well. But the same way those 1 minute reactions occur, you're going to see these daily, 4-hour, weekly areas get tapped into, and you have these large pullbacks on it. So you just want to be mindful of that. Mindful of understanding how price moves. So let's go back down to the 1 minute. Hey, look at that. Now ferocious move down. Beautiful. Ran that old high. And this could particularly be looking for the lows now, the early people who jumped in, the clearing up the stuff from last night. But again, it is due for a higher time frame pullback because we took out a higher time frame area, even if that's just a higher time frame candle, even if it's just a down candle on a higher time frame, we grab something on the higher time frame. Look at this. This is 50% of that fractal, even though it looks like it's not a zone on the higher time frame. And even though that candle could end up being a bearish candle on the day, which it'll probably end up as a doji maybe or something like that first, it still will honor these areas that it comes down to as it created a zone. Now, maybe in like an environment within like OMC or something like that, spike quickly down there and just like get rid of all of that immediately. So that's even more volatility happen. But look at how it honors the area. We talk about these levels. We talk about the fractal and what is the most important, area on a fractal, which is oftentimes the 50% of it. But you don't want to be caught in this. This could, you see how this shot up, took out that high, quickly came down, took out a series of these lows down here. And then what? Traded back up in here. We can trade back up in here, reject out of here, take the high of there, come back, take the low of there, head down into here, go to run this low because they got in early, then pop back up here and get back in here, and then start to run up these lows down below here. Like there's a ton of stuff that could happen. It's just you don't want to get caught up. Usher, you're Usher, caught up. You don't want to get caught up in just being on the wrong side, and then your account quickly, ends up in a negative, or you lose it, or whatever it is. That's what I talk about going into the higher time frames, doing so. It's important to know how these things work. And knowing that volatility is just gonna just do it straight through, but you're still gonna see those little pullbacks. You're still gonna see those little things that occur. You just need to see it more often. You see how Shaz jumped in a short from the origin, jumped into a quick short, was able to get a little money out of that and get out. He knows what he's doing. He's aware of, even if he still feels like he's learning, he's aware of, I used to have to wait until the car stopped, and then somebody had to come around and open the door for me. And then somebody had to help me to get my legs inside of it. And then somebody had to help show me how to put the seatbelt on. And now he's damn near jumping into moving cars. Like jumping right on in. Oh, it's cool. Keep going. You go 100 miles per hour. I can still jump in that vehicle and safely get an entry. That's the way that he, can operate now, because it took time. He went through that learning process. It's nice though. This 50% of the fractal. That was like yesterday. Yesterday did the same thing. So I'm talking about 50% of the fractal, but you guys are also seeing from this 1 minute time frame 50% of the zone, the last down move. Here. So I'm seeing 50% of the fractal from a higher time frame, but on a lower time frame, that fractal is just this into trading up above here, coming back to the 50% and going. I'm seeing that from this time frame. Don't have to go to any other time frame at all, because I saw that we ran a daily high and then traded back within that fractal that was created after we ran up above this high and before we pull back. So this is pulling back to the 50% of the fractal, and then look at this move off of it. That's why I went to the higher time frame and even marked this out, because we know that, like I said, whether we were supposed to trade down, which the day could end, the day could still end where we're down here. Don't think that just because we're trading up like this, it's going to be a trending day and we're just going to continue going up. The day could still end with a red candle down here. We have a huge, amount of time for that to happen. Anything could happen within that time frame. But as I said, we still pay attention to these areas, because even if the day will end down here, it will still respect these levels the same way. It's just that on its way to that, you could end up finding a huge tap into something that we quickly shift away, and you're wondering, wait, why didn't it short? We had the Judas that went up above, and then we traded down below these lows, and we grabbed the liquidity to the top side at the kill zone, and now I was trying to short through the imbalance, because the imbalance was created and I wanted to take it down into targeting Asia's and what? Wrecked. Just like that. The concept occurred, price didn't respect it. The concept, look, this is the concept occurring. The concept occurred, price didn't respect it. The concept actually happened right in front of us. Price did not respect that concept. That's where the subjectivity comes in, because it's not something that happens all the time. So then they take this imbalance here that they were shorting out of, and they invert it, and now, it was an inversion imbalance. So I was able to find an entry on the inverted part of it. But the first time this concept showed up, grabbing liquidity over the high, displacement below, y'all hear that? Displacement below, aggressive short down below these lows. You come back to short it, and then Not saying that I'm not saying anything, wrong about him or his concepts or whatever it is, but I see why students lose, because it lined up exactly the way that it's taught. And a lot of the times with these concepts, the letter killeth with some of these concepts. The letter killeth. The letter killeth. The rules that they're given, they pay attention to it so much that it kills what they're trying to do. It kills their account. The actual rules that they're given, it kills their account. This is whatever that is, the 2022 model, or from what I've understood, that was it. That was it. This is what everybody's looking at from the 1 minute time frame. They trade on the 1 minute. And if you go right over to Twitter, the rest of the day, people gonna come out and be like, yeah, down 1R because I got into a short right here and the placement stopped behind here. And then just because all conditions were met. I followed my plans. My plan was to grab a liquidity high, a daily high, and then wait for a displacement. and then short out of the imbalance that's created. And oh, even though that happened, took them out. Because they have no idea what's down here and why this even occurred. Why did it come back into the 50% of this and react this harshly? So then what? They invert this imbalance out, or they're saying, oh, a silver bullet imbalance showed up, whatever it is, and they're going to look to potentially long that back up above these highs. But what happens if this imbalance doesn't even hold either, and it ends up looking like what? What happens if it ends up going like that? Retailers running around talking about Head and Shoulders. I told y'all, Head and Shoulders, they work. Oh, neckline break, TP smash. So it's very important that I'm saying, I tell you guys all the time, I'm not competing with this guy. I'm not saying that, I'm far better than he is. No, his stuff is enough for the time that he's been around, and it's great. It works in certain environments, Um, and he probably has another model that could have saw this coming, but for people who are following the rules of that 2022 model, 2022 model occurred, swipe down below the low, create the displacement, you go to short out of it and ring your stop. Then you go to long out of this here. And not saying that a long may not work out here. You could probably get a long in to violate this low here, because it still looks like, again, what did we say about the daily potentially ready to pull back? It still looks like that's going to occur. But now this is people using both models. They're going to say, okay, we ran these lows, and then we created a displacement straight up above whatever it is, like whatever it is that they're seeing in here. So yes, there's a possibility that this still gives them the gratification of the bounce wave, and then comes down to take them out too. Dennis, wait, hold up, is seek and destroy. Whoa, seek and destroy. Whoa, these environments, whoa, you gotta be careful now. You gotta be careful of these environments. I'm just saying that sometimes it's not you guys, like people who have studied that, it's not you when it comes to that. It's just that you can see those things occur and you still lost from it. There's no way to even manage that loss. You immediately got ran to a loss. Here, you might have gotten into some profit here, and then if it scales back on them and then violates the low, then they could have got a little bit out of that one, and then it took them out. So there's all these different realms of possibilities for these things to happen, which they do. And sometimes when they happen, it can make you money. And then other times when they happen, you can lose. So that's yet another reason why I'm talking to y'all about the 10-point stuff. Because you don't have the experience to hold. You're learning, you're trying to learn that, but it's bad habits. If you're trying to learn to hold a 100-point move, you don't even have enough funds to live for the rest of the year out doing nothing. But you're trying to teach yourself how to do something that's the long game. Eventually, you want to get to that. But right now, you want to make something. You want to be paid. You want money to change your circumstances, change your world, all that other stuff that's going on. That's the goal, right? So I continue to harp on that because if you got into this move here and you took it all the way in the top side, that's fine. There are times where you're going to be able to do stuff like that. But if you develop a habit where that's the type of trades you want to get, guess what? You're going to lose. You're going to lose. On the days where it looks like it's going to do that and then reverses and takes you out, guess what? You're going to lose. I'm not placing limits on you guys. I'm telling you guys that you have those limits and you need to work within it. First, the goal is to start making money to change our situations. Then, right? Then it's to, actually be able to make calmer and wiser decisions that you don't have to be sitting here all day to do it. So you want to make money, you want to learn how to win a 100-point trade. You want to make money or you want to be right? Yeah, I was right and feel good. I was able to hold on to that take up there, and then you see these guys up 1%, down 3%, up 5%, down 5%, up 2%, down 2%, up 16%, down 19%, and they always oh, it's a break even month. Like those are things that happen in trading. Those are things that happen in trading. We just break even. It's okay. It's okay. So that's gonna be it. That's the realistic way. Okay, that's a realistic way with the stuff you using that don't work, and not understanding how to compound. Compounding is not taking a trade here. Let's say you took a trade here, had your stop behind here, move your stop and break even. You took out this high, and then guess what you as greedy, y'all? Guess what our greedy selves do? Move our take profit up further. Then we see it coming back on us, and it's like, oh, maybe this is a pullback. So let me move my stop loss back to break even, and hopefully it just moves off of that and then trades up there to the stop loss that we moved away after our stop loss was supposed to be here, but then we should have took profit there. You see how all of that comes together, and it shows us who we are. Shows us who we are, shows us what we're doing wrong. So you guys understand that, mean well with what I'm saying, and I'm more than likely ahead of the curve. Ahead of the curve. If you made it your idea to take this entry right here because it was equal lows, and you said, okay, we're going to go and run the high, so I'm going to hold it. What's happening? And those are the losses that we take in private and don't say anything about. And then we come and post our profit when when we're here, let's show that I was able to hold this, and oh, look at this entry, but we don't talk about the loss. And knowing that this was a scalp versus, because this was a scalp up. This was a scalp up versus the greed saying, oh my gosh, wait, we ran this, we should be coming back up to this and take that out. And the greed running our stop. Yeah, I just know that it's gonna do. I was on the 15-minute. And the 15-minute, we came out of a 15-minute imbalance. So I know that 15-minute imbalance is going to take us to our 4-hour target back here. Because we got into an imbalance, and this is just supposed to be a little pullback for continuation up above here. Are you doing that all from a 15-minute move and wanting to hold 100 points because you want to be right? And you want more. You know, like we gotta stop that. Because you're gonna have days where you work well in that environment, and then the days that you don't work well in that environment, that's when people are silent. That's where people are silently losing their account. And I'm literally saying, yo, wait. Just wait until this specified, just wait. Or wait until better areas. Wait until you get to, you know, areas that are more probable. Wait until your stop loss can be smaller. But all you gotta do is wait a minute, a couple minutes. All you gotta do is wait. All you gotta do is wait. This is the, remember what I told y'all, retail cemetery stuff? I'm serious about this. I don't place entries in it. I don't. I don't know what's occurring here at for the most part. There are other stuff that I might think is happening, and then the totally opposite thing happened. Guess what? The things that I'm used to seeing, and I have the logic behind it that it's high probability. Why is it high probability? Because I back tested it so many times. So many times I back tested it. So I know here's where I'm gonna execute, and that's where I'm gonna stop right there, and I'm not doing anything else. And I'm gonna just wait. You develop a system around that. I'm trying to chastise y'all. I'm telling y'all, I'm not trying to do it. I'm not trying to say, hey, you can't get 100 points. I'm saying that you're developing habits that are going to be detrimental to your learning. Because then all the questions that you have, so how is it that I can have better psychology with, oh, you want better psychology for taking that entry you shouldn't have taken, and leveraging more than what it is that you were understanding in these areas. Because like I said, I don't have a thing about over leveraging and all. If you're pinpoint accurate and precise, you could always buy at the best price. You could always buy at an area or sell at an area that, is the most efficient. So when you have a strategy that's efficient, you know, you tend to be able to uh, do things that some people can't, you know? And things that some people would call risky, you can handle because you know the other side of it. You know it a little more than most. All those things. That's what experience does. You know, we've taken planes so many times, and there may be some kids who have never taken a plane before, and they feel scared the whole time, scared of just a little bit of turbulence, scared of the plane taking off, all these different things. But we've been there so many times that we're kind of desensitized to it. And there's some people that may still have aversions towards it, may still hate it, all that other. Some people that still like that, you know, even in their adult age. But guess what? As kids, you have a different level of experience of encountering that particular thing than adults do. Feel like it's fine, nothing wrong, you know, to the people who have been through it already. People who have not, they have a different set of emotions. Yeah, you just got to make sure that you're doing that. Like I said, let there be line for what's occurring. You say you have this low here, you have this high here, right there, right here. Sorry. And then you have another low put in right here. Now, though we didn't close, we traded up above the previous high as well, wicked up above it, tapped back in, and then had to move into our area up here that we marked out. But on a lower time frame, you're going to see a strong move down. You're going to see a strong move up. You're going to see even a closure on a lower. You're going to see price flip up above this and close. You're going to see a tap back into it. And then from here, right here, to trading up above the high, you're going to see that that's something that could have been taken from the understanding of a lower time frame. So there's the methodical confirmation in here, and then there's these other confirmations here that sort of you could play the bottom or you could play the top up here. But you got to know where it is that, you're trading from. What it is that's happening. Look at how you come right up to this. What do you get up to 30%? 11 points immediately. One candle goes in, the next candle goes straight out. On a lower time frame, you would have saw a flip in here. We put in this low, and the same candle is responsible for the high going in. This wick right here slammed just below it, tapped back into what? 50% of the zone created behind here. And then you see this short coming out of it. On a lower time frame, you would have saw everything that you needed. 1 hour chart. 1 hour chart meaning the 1 minute should be used as your hourly. If you're on those lower time frames. You see what happens here? Quick move away from there. So there's the impulsive from here. And then there's that other move that was the confirm in there on a lower time frame, heading down into there. That's for someone shorting. There are still areas for someone long if they were playing the long side. Look at that huge candle that pushed out of what? This little imbalance. Not even saying that this is going to hold, but even if they were to take that entry because they were looking at it from the long side. Look at that. Ran you 14 points coming out of there. You can play both sides, but you have to understand what you're doing, why you're doing it. Those things are necessary. What you have going on, this is just coming back to this area to make another mitigate. Let's see though. This is why I said that, you know, it's different trading a range versus trading something trending. And trading on the 1 minute, it's important that you see what's going on the 1 minute to know how to trade and scalp within that. If I was on, let's say I was on the 5-minute time frame, look at how this all looks on the 5-minute. The 5-minute, let's say I took this area as the up-down candle. And I say, yeah, we were going to come right into here. I spent a few minutes in drawdown profit, drawdown profit, drawdown profit, profit. Why? Because I'm hoping that this taps into here and goes to take out this high. No, you're going to lose your account doing that. You're not trading on your own account to be able to implement your own. You're trading with these max drawdowns and all that other stuff, all these other conditions that are already against you on your account. And then you got to find a way to work within that specific account and still do the same stuff you're doing here. So when I talk about 10 points, I'm serious about that. Hey, that's beautiful, Shaz. I'm serious about that. Because you got to start somewhere. You're not going to an NBA arena talking about, yeah, you know, I've been putting up shots in my backyard. Get out there and what? If LeBron come in front of me, then watch what. I'll run you over like a train. That's why I pulled back, you know, in even teaching so closely to people last year because people didn't want to overcome themselves, and you can't save people from themselves. If they're in a storm that they're living in and they refuse to at least take the life raft that you're throwing out to them, it may not help every part of whatever it is that they're going through, the wind, the rain, the objects flying, the other people present. It may not help all of that. But it's a start. And all I'm asking is like, yo, just be a steward over this, and I'll give you more time. I'll help you with greater understanding. I'll be here to be able to build you up in a way where you follow me and follow the ropes that I put you on. You're gonna get this. There's no way that you won't. There's no way that you won't. No way that you won't. I know what I'm doing. There's other people that may not know. I know what I'm doing. I see it and I show it every day, you know. And it's up to you guys to work within that. Later on, you can start freestyling, mixing up all this other stuff if you want. It's fine. I don't have the wherewithal to fight over, you know, telling you to put down the thing that's hurting you, and then you coming back to me for me to help you after you got hurt from the thing that I told you to put down. Man. Hey, Pope in the building. What's up, brother? Hey, yo, come on, look at, come on. Just a few hours of work. Just a few hours of work. Look at that. Yo. I'm talking about you and Shaz out here killing it. Pro sticking to his the specifics of what he's told to do, like conquering himself. Look at that. Who is it? Hey, listen, they out there sending me messages, want me to do a live stream and all this other stuff, like I'll do it when I'm ready. No, I said this week, but maybe it could be next week. Who knows? Maybe the end of being August. Who knows? But that's the price you pay when you follow yourself and your own understanding, and you think that you know better, and you know end up making those mistakes. You need people to come and rescue you. I'm literally teaching people something that they can be self-sufficient. There's people that learn how to do this stuff and ain't never said a word to me. Or people that I ain't never heard anything from. And when they finally get it, they just send a message on some profile that I have no idea, never saw in my life, never remember them engaging with me at all. And they're like, oh, for a couple of months, I've been doing this. And I realized that if I stick to the plan you've been given, it's really helping with this, it's helping with that. All that stuff is great, amazing. But it's going to start with you. I'm going to take a look at oil real quick. Yes. Yeesh. Wow. Back into this area here, but it looked like it's coming for these highs. And gold had a decent push too. Oh, look at that. Last night I had marked out these gold. So I had us coming below this and tapping us into here because the failure to take the high here. I had multiple swings already in here. So I don't know. Obviously, I don't have to explain to y'all. Do things. So look, we tapped right into here through, what is it, through Asia. Had a nice bump from Asia. That's nice. 78 way up to 83. But this had a nice move up above. Remember, we ultimately had gold taken out this high from the higher time. We were somewhere down here. We said that gold would flip up above this to tap into the area we have back. But seeing that this is mitigating this area multiple times, I want to be mindful of that. Then we could end up seeing gold take out the high again and then make its way down. And then that'll be something from the higher time frame, like equal high somewhere up here would end up violating. But we'll see. We're not forecasting too far into obviously. Oh, oh. Look at that, still short. What did I say about these guys getting to the imbalance here? And they're like, oh, yeah, we ran the liquidity downside, and then, we had the displacement up to, like, they make up all these things. All right, partner. Nice little drop out of here. Beautiful. Uh, let's see. It's in balance at 1968. 1968. 968. Through here. There's an imbalance in there that you want to be mindful of. Could dip into here, send you back into the zone up above. Because the zone up above was just created right here. Remember what I said yesterday, Kenneth, about the early in there? Yeah, so again, we're expecting this because of obviously that daily time frame run. So we want to at least see a daily down candle or even a daily pullback. Pro and I was discussing. I just see that ES didn't necessarily get to. Oh, it did. It did. Oh, look at that. Yes, you look at that 4,600. Look at beautiful. Beautiful. That's what we expected. Yes. And look at how ES is up here and NQ is down here. Remember what we said about correlating? Don't even think about it. Hey, this here US 30 is just goodness gracious. This US 30 is what? Yo, the US 30 got some life back in it. Wow. There's some life, baby. Yeah, I do have us coming up above this 35. But watch it, we might take out this inside high here, 24, and then you can see a pullback again. Remember, that's a daily area, weekly area up there. The same type of pullback too. Hey, watch now with this momentum here. You want to remember about this whole momentum after taking a low. The momentum that comes back to take that inside high oftentimes ends up being that V-shaped recovery, where you could see us head up into there. I mean, you can still see us get rejected, struggling again, try to make its way up. And we could either fail from here and then go up and do that from a higher time frame, or you could end up taking out that high there because the other indices are still trending up to get to their daily target. Then you know, move after up there, back into there. There's a ton of variations, a ton of things that could happen. But if you stick with what? No zone, no trade, your probabilities end up a lot better than and understanding the larger zones versus smaller zones versus all the other stuff in narrative. No. Can't believe folks are not taking advantage of this best return investment history. History, you hear that? History. That's somebody who worked in wealth management, understanding that. Best return ever. It's limitless. Limitless. Man. I know I do miss the music too. Wish that the software was, a lot better. to facilitate that, but obviously there's those challenges. Look at that, Shaz is just killing it, just killing it. And you know what's gonna help? Not asking people how they do their stuff. The same stuff that they're doing now, they learn from the same thing that some people are refusing to just sit and watch. The same thing that some people are refusing to sit and watch. So, don't put in that blood, sweat, and tears to help yourself grow where you are, and then have somebody else trying to take the shortcut of making you the person that they now want to and do. No, they got to put in the time and put in the work too. Same amount of work you put in, they got to put in that as well. Or else they're always going to end up being dependent on you, and then entitled that you should do something for them to maintain whatever it is they're doing. No, doesn't make sense. Everybody's watching the same stuff. Everybody sees the same stuff going on. You see some of them in some of the same trades. One person on one side of the market, other person on other people on other pairs doing the same stuff. So there's a little hidden S&D in here, so I'm trying to figure out if we'd reject into some balance and then take out the high of the. But I don't know, don't quote me on that. I'm just saying ahead of things. You still got to know where to follow your level of experience and the time you put into things. Nobody's going to take or make the shot for you. You have to. Look at where we're at. Look at this. We're coming to 30% of this last zone up here. We get a rejection out of there. Although we're expecting potentially to come back into here, violate out of here and then take the high of this, was there not a potential profit, whether it was here, to go down like that, or whether it was within the zone to go down like that? If you just happen to be on the obviously, like I said, trying to make its way up above this, but you happen to be on the short side, still, there's still opportunity there. Versus exactly what I just said, coming into this imbalance here, then trading up out of this imbalance into here, potentially rejected back up above here, or you can just go straight above there, whatever. But it looks like the momentum is on that side versus this. But if you learn this, then you could take up either side, 1 minute ago was a silver bullet. So is this 1018? Oh, after sweeping lows, having to move up into here, but they didn't get to see the market structure shift thing. Most times they're waiting for the shift of a high, unless this meets the criteria here of sweeping lows and then forming an imbalance after the low is swept. I thought there's still like a market. Yeah, see, with Charles' level of success, I told y'all he does top-down analysis, weekly, daily, 4 hour, 1 hour, 15 minute, just taking all the different areas from there and utilizing those. You see how much, yes, running a low is taking the liquidity. Then you had an island reversal, SIBI. Oh, okay. Yeah, so maybe this is that to in turn go and take out the high. Um, and as I mentioned, possibly facilitate, higher prices on Dow and on this here on ES. Like you mentioned, Dow has that higher time frame target up, um, and ES has that up here too. This is the last up candle in ES. This is the last up candle in ES. This is the origin of the move. Yes. Actually, no, I wouldn't necessarily say on a particular time frame because there's origins on different time. So yes, for ES, I was expecting us to get up above this white line. There was a wick on the inside of there. We're at the 50%, potentially heading into 70% of that too. So if we reject that at 70% or even the 50%, that's fine because it is a weekly area. We did grab something to the top side. But if it wants higher prices, there's this here. Dow has that area up there that wants higher prices. NQ already took that out, and NQ essentially could just be, like I mentioned, the higher time frame equal highs that would essentially start to bring down, these lows and pull it back some. So look, we got the rejection here. This was at the 50% of it down here. This was also still inside of this hidden S&D. And then what? Went up to violate it. And it had another pullback within here. So the next high that's in order is here. Now what we'd say is if this high is taken out, that high is directly responsible for putting in this low. So if this high is taken out, then yes, you could see a pullback into the area and then a continuation up above to run that high. But this is the high you need taken out to definitively say, yes, we're bullish. That's the protected high. This high, put in this low and closed. That's, the protected high that we have there. So until that's taken out, then you don't definitively hold on to longs because you still have an area that's there that has not showed that price wants to trade higher. There's that other tap into the imbalance, the 50% of it. So I'm guessing whoever was trading until buy side, they got taken, or that person that's just strong-willed, holding because they want to see that up there. Let's see. Dave, you don't recognize this, do you? Recognize what? What? The green line across? The green line at the top? Oh, the rounding. Yeah, the rounding. Yep. Not just that, you successfully, we had this high put in. We shifted down below it right here. We traded back into it by the 50% and then retested that and left. And then what? And then what? Also, this low that put in this high we trade below it. So we could end up topping back into here and then shorting down to there. It's in multiple time frames. It just depends on what time frame you traded on, but it's in multiple time frames. Exactly. It's in multiple time frames. Hey, hey, look at that. Um, oh, they took their daily 5 and 10 and went golf. Yeah, that's, you know, that's not, that's possible too. Hey, oil might have got rejected. Oh, yeah. But we know that for oil, um, you want to maintain market structure. So you have this low, I mean, that high, this low here. You have another high put in that swiped some lows before trading up above it. So this high and this low belongs to a completely different time frame than this high and this low does. So you do have this zone for oil here, this larger here, but when it comes to the protected lows, that's here. So it's just that these things belong to higher time frames. If I was to go to a higher time frame now, you'd see that these are wicks up here. So that's why this low can't be considered the protected low here for that time frame of that swing, because this would be wicks just up above this previous high. That would be wicks, and the body just closed here. So then this is the protected low on that particular time frame. But yeah, this is nice. On this time frame here, obviously see your highs and lows within here. You got that same break that Charles just mentioned. That same break down below here. You tap back into the zone here, and then you got this shift away. So this is why those structured things are very important. Zero to hero, all of that other stuff. You got to know how to see different time frames in one time frame that you. Like I said, this was an extra tap in the imbalance. But again, those silver bullet guys, they didn't get a market structure shift as of yet to definitively say, yeah, buy side is going to be taken out. I don't care what higher time frame area is down below here. I don't care what the higher time frame did here. I don't care what it tapped into back here that even caused this to occur. I don't care about any of that. I care about verifying on the time frame that I'm trading, with 1 minute, that that occurs in order to say, yes, this is going to be taken out. This is how you mess yourself up. You taking a 1 minute move based on a higher time frame zone, but you don't even know how the 1 minute should look to facilitate that move up there in the first place. So you get in here, you put your stop at break even, you get or you get in when we take this high here, you here now you and you were hoping that we were going for this, so you started holding stop loss way back here, and you're not even hoping that it doesn't go back to your stop loss here. Because not knowing what? How to get into a better entry. What's a better entry? What does that even consist of? A better entry. When structure is broken and we tap into a particular area, your stop is directly behind that area to continue into that higher time frame move, but you need structure broken first. You need to always consider what part of the order flow am I in. This can very well, yes, make its way up. But the part of order flow that you were in with was not something that took out a protected high. So the minute it takes out a protected high, we have an area that's what? We have an area that's protected below. To definitively say, yeah, so, I'm going to get in here and then hold until up there. But you don't even know how that look because you just jumping into 5 minutes best and then getting smoked. And after the fact, you're like, oh, I should have known this. Why did I hold that? Greed. Because I gave you a way to make money while you're learning. You don't know how to do that stuff yet. You're trying to get there, but you're also fighting with the greed that you have to want to get ahead faster, get ahead sooner, get ahead quicker. It's the greed that you're fighting. And that's everybody's issue. I even have that at times too. Like I must stop clap sometimes. Does my stop get clapped? Not the way some of you traders out there talk about it. I don't know what you doing, partner. You got red days and weeks and what? Yeah. Yeah. Okay. Hey, that's nice. I told you that the guy that's down here, unless he's stubborn, some of them that's stubborn, they go, oh, they say, we trust our system that it's gonna go up there. Just like they trusted the system right here that it was gonna go down to Asia, and then they came back for buy side. Then when they had this huge push back up here, they trusted the system and this imbalance that it was gonna go up and take out the high again, and it came and clapped them. Rules. Let me just delete some. Oh. So there we go. Now this is, what did we say, Kenneth? Earliest indication. When we often take that out. So oil look like it's due for a pullback. Back into where? Pivot down here. We took out this high across. We never tapped back into the zone through here yet. So oil is looking for lower prices now within here. And you got your break from the higher time frame here. But we see that with larger zones when they're violating. If you don't understand zones, it's because you don't truly know structure yet. That's the thing that we're having the biggest issue with. Structure. You got to learn structure first, and then the zones is going to come alive to you. Oh, here's candlestick structure, and there's the 1 minute structure, there's a 5 minute structure, there's a 15-minute structure, all of these different kind of structures. And that's why the zone is like that. That's the zone that's from, oh, that's the zone. That's why I was messing up with so-and-so structure. You tried to talk me out of those diamond hands, but I didn't bite. Hey, humans are gonna human, you know? Humans are gonna human, you know? So humans are gonna be humans. Hey, Gianni, what's up? How you doing? Yeah, humans are gonna be human. Can't. Look at ICT talking about NQ has evil intentions this morning. Southside might be too rich to leave in place. Well, partner. And see, stuff like that would probably have his people targeting uh, uh, Southside. Oh yeah, yeah. We gotta go and get the sales side. We gotta get it. And look at Price just spooning itself back up to that there. You see how you talked about his model of taking these lows, island reversal, that back into balance and going for buy side while he's currently tweeting that sell side is too rich. This is the author of what you just explained. You know, teacher day. This might be this might be the target for the day. While we're watching everything else within here and understanding what would constitute us definitively saying yes, we can take out. Which there he goes again. Seeing how it reacted in all of these different 30 doesn't give us a new low. What happens? We get it. Oftentimes, based on what happens up here, we end up taking out the high there. But you want to read what price is doing. Read the structure involved. There's so many possibilities of anything happening. Price could have went down and grabbed his sell side. Yeah, it could have. But when you follow in price now and you see what's actually happening, you don't really care about what could possibly be happening down there. It doesn't matter to you. Look at down, tap right back into this imbalance here. The imbalance that shifted to low and then traded out and dropped down here. It's 376 to 506. Well, 35, what is it? Oh, 376 to 305. This is that 50% rejection on ES, like we mentioned. We already saw how the 30% was handled. The 70% is up here. You don't have to get everything that happens. You don't have to be in every single move that you see. But you got to be able to know enough to understand what price is doing and where you can get involved. And if that's those little 10-point smackaroos, do that. 10 points is a lot. Some people walk away with after the fact he's gonna say, oops, we're not gonna take it. Sorry. Yes. After the fact, you're gonna hear that. But people already blew their account. People already blew their accounts. Oh, oil took those lows. But see, look, oil wicked below it. Would this not be equivalent to respecting lows on a higher time? Took them out, but it, even though it wicked below it, it still respected it. Did not close below. So just like you needed to see a close here, and then we traded, see that on, or maybe even the 5-minute order flow, whatever it is. But the higher time frame order flow, even with oil dipping here, is still intact. Still intact from here up to here, down to here, up to here, came back to here again. That's not a higher time frame low broken. So it could literally make its way back up like that and trade back up above that high. But you want to follow the market structure that's within here. And if you see the thing that it's reaching into, you want to be able to utilize entries either both from the previous areas or the newly formed areas and just take a little bit from it. Telling people they're not here to be right, they're here to make money. And then the growth of everything else is going to be great after. You got to fill your reserves and all that other stuff prior to trying to accumulate.
Order filled.
So what does that mean? That means that you got to get to normal first. And then you get into a space where you can breathe, you could, move somewhere else, definitely organize things the way that you need to, get everything else in order that you need to in terms of legacy and trust and all that other stuff. And you
Order
move
filled.
into that. But some people never ever make it to that stage where they could stop. Never make it to that stage where they could stop. Oh my gosh, what kind of execution is this for ICT? What kind of execution? Was this? Let me- Yo, no, he showed it. Look right here. I'm gonna post it in the chat. He showed it right here. Unless it's just him trying to teach them a lesson or something like that. Yeah, I told people the dollar was looking a little healthier. What did I say about this? I said that we broke structure to the top side. We came back to the origin of the move, and then what happened after that? Immediately traded up and broke structure again. Topside. So you learn where to get in and be protected. You're protected after the break. Everybody else don't mark out structure to first understand where their protected areas are. This kid always getting stopped out. It's the people who listen to music is unintelligent. Like, man, he must hate my stream then. Oh, yikes. He was calling sell side on Twitter 30 minutes ago. No, 30 minutes ago. You look at his tweet. He said 15,852 and 15,845. Wow, he was calling down here. Yeah, this is down here. Yikes. Many people holding this, not using their stop loss on this initial. And they just holding this, hoping to get back in. Hey, yikes. But guess what that's targeting though? Guess what that's targeting? That's targeting Asia. Those concepts, Wednesday reversal, whatever, like you hear a lot of that stuff. There's a lot of stuff involved in that. And I'm not saying that he's not successful with those things. He definitely is. Um there's just a lot more involved in those things. I'm like, hey, that's stressful. Bill Gates said he wouldn't hire. I watched these equal highs to below this. And if this gives you that at the 30, then you already know. You can get him bouncing on the 70 and then drop back and down below here. Oof. Can you imagine somebody not trading with a stop loss on this? Oof. Oof. Imagine not waiting for a confirmation. This is what I'm saying with these larger zones. Y'all don't trade them by just hitting buy on it and then it takes you down here. You hoping that you at least get back up here. No. Be methodical with your approach. Create this little wick here. It looks like it's about to form. 7 seconds left on this candle. See if it gives it a little dip into it and then try to run back here a little bit. Sometimes trying to time this wick, you can get smoked on it now. Don't think that you can't. Trying to time this wick tap, you can get smoked on it. Usually I like the wick taps that at least flush below something. I mean, this flush below this, so that's why I'm thinking, yeah, that's possible. But I like the wick taps that flush below something, and then we get into the belly of that wick, and then you see us, move off of it. That's my rules for what I'm looking at for wicks. So obviously I marked that out because there's a possibility, a high possibility of that because it did flush below something. Telling you, people just be trying to use every wick to trade in, and y'all know how that is. You got a few bands for the low. Trust me, that man is rich. That man ran mentorships for the longest, had huge reach to so many people. That man don't need nobody's money. And he could trade. I definitely think he could. It's just um he's not as flexible, you know? Not as flexible. Got a lot of stuff that work within his system, but you may need to have his eye to successfully do that. Hey, this is nice. Just dipped into there and traded up into there. Now, is this their displacement? They put in this high, they put in this low, they go and wick above the high. And to the left here, we grabbed out these areas to the left and then displaced below the low that brought it up here. So is this that thing for them? I don't know. I have no idea. Hey, that's beautiful. Look, I didn't even notice that on the equal lows down here. Equal lows down here. So what did it do? It took out whatever highs that was to the high of that candlestick. So there had to be like a high inside of here and this high right here that it went up to take out. But you don't only, short or long because you're in equal lows. Obviously, Shaz, that we are in the origin of this move here. Obviously, you're aware of that. Like I'm sure you are. We took out some lows there, swept something. I always say that you don't expect a reversal. You don't try to anticipate it or force it. You want to let it come to you, but oftentimes the thing that you'll see that can help you gain some understanding is after it has taken something. It stops below, stops above it, whether it's a reverse from a higher time frame, reverse from the time frame. You just want to make sure you always have that. Yeah, let me. Dang, glad I found the 520K guy. Yeah, yeah, the guy preaching about things that are not normal. Thanks for saving me from that, Dave. Hey, you. Listen, not saying that some of the stuff don't work. Like some of the stuff about time and all that other stuff, it can be precise. Um, and then other things, it can be highly subjective to where you did it earlier in the somebody else did it earlier in the session and won. Give yourself more possibilities of things potentially occurring. Day 5 on the eval, balance sitting at 50K. Hey, love to see that. 1K to go. Love to see that, brother. Amazing. Love to see that. Hey, Shaz is out here just, yay. That man insider trading in there. He got some insider trading going on over there. This is mitigating area multiple times, by the way, y'all. Um, here. You see that? Bounce, 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 bounce. If you end up having another drop within here, you could have another bounce there. Another bounce there that would also correlate with the zone has been mitigated multiple times back here, throughout there, as well as what we actually have within there, as well as us mitigating this area multiple too, and this being the origin and blah, 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 blah. You know, it all works together. It's all fractal. But we see the most data of it on the time frame that we obviously, you know, I got Buffett on the other line. 31 accounts. Hey, look at that. 16. Yo, that's insane, man. That's some insane stuff. That's some insane stuff. And I was talking to my little one and, saying yesterday, like the way the whole world works. And some parents, you got some, other people that's parenting with you. They don't want you to be entirely truthful about the world. You help them to understand, like, there's people that work for pennies on a dollar and be talked to whatever way, and be mistreated, and people miss time with their kids. Some kids get sick, some other things happen throughout, life. And you were just trying to take care of them. But they don't see it, especially as a father, like, I'm not saying that it's not hard for moms too, it is, but for dads especially, you miss a lot of time just trying to provide, and you kids are at the hands of whatever it is going on out. You don't want that. You miss a lot of time just trying to put food on the table, just trying to keep things afloat. Like the forgotten people in the house, right? And they swear everything is done to suit us. Yeah, 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 yeah. Okay. Everything is done the way you. No, it's not, because I wouldn't even be arguing about it. But we do so much just to you know keep everything afloat, and a lot of times that means missing time. The most expensive thing we have in the world, and we give that up daily. Just what? Be demeaned in those places, be cut when we're no longer needed, all that other stuff. And we out there trying to do this for a better life. And even if you're not a father, just as someone who spends time taking care of others, who knows that they have parents that are getting older and they want to make whatever parents, whoever it is. One guy wrote to me and said he's taking care of his disabled brother. And he can give a better life. He can give a better life to his disabled brother. Mind you, he's taking care of someone who he did not, like, he's not supposed to be entirely responsible for, but things happen with parents and all of that stuff. So it can be even things like that that you see happen with people, but you want to be able to meet whatever it is that life brings you, and doing that to be tied up into the interests of what another company wants, what somebody else wants, while they go home and do it with their family. Oh, you put in a request for time off. No, I'm sorry, you can't go. And you can't what? You said I can't what? Go from Dave to Darren real quick. I just need a joint and a 12 pack. Charles, you a wild one, man. Wow, boy. Yo, beautiful. Beautiful. Y'all out here killing it. Hey, yo. So I have it coming up to here. If we do drop out of, that's a possibility, but I have us getting up in. But even though you saw me mark this little out below here and you stabbed into it, this is also the same thing as using down candle down. You see we tapped into the 30% of it. It's all happening all the same way, and there's just going to be a way that you're able to see it for your benefit. Hey, y'all out there starting a war. Let me fire up my Ninja Trader. Y'all out here. Yo, let me enter into the chat. I'm telling you, if y'all want to trade Asia with size, make sure you're trading Asia with size, you know, um, and utilizing the smaller ranges if you don't understand, particularly how to do it in New York. So in New York, it moves a lot faster, a lot more volatile. So you got imbalances down here not being respected. 10 o'clock, everybody, there's other people who want to put it bullet imbalance tapped into because from 10:38, you have a huge shift down below, runs through that. Oh, but the silver bullet was on the 5 minute, and I saw it from the this candle here. So from the 10:35 candle, I try to get in on that, and then whoop bang, smokes the imbalance, the candle that they placed their stop on, which is the candle that formed the imbalance. They're saying, yes, this is the silver bullet thing. Or maybe no, this is the silver bullet at 10:50. You see how there's all variations for it. Chasing a specific thing, one track versus being able to understand. Let's see. I watch 160.11 as well. This is the fractal that's supporting price. You could tend to have a move here back to the fractal that's supporting price back up. So sometimes it could look like there's an actual rejection when that's nice. I'm gonna go to this. We could tap 1628, that'd be good. Put my stop behind. It's at 27 now. It's right there. Oh, there we go. There we go. All right, look. First trade, $2,000. Great. Right inside of there. Um, I saw this with the 1 minute. I saw this wick occur here. Usually, when that candle is up, it pulls into the previous candle, but then it flips bullish. I told you guys sometime last year that take some entries like that from M1, and I was able to get that right up into you see 16028.75. Able to take that real quick, little stretch into there. I know what this is. This is I was targeting the bottom of this here, the bottom of this up candle, because this up candle is the origin of the move. So sometimes you see the origin rejects at the beginning. So you can trade into the origin and reject as well. It just depends on what will happen within it. But I was targeting the bottom of it. You see 16028? Targeting the bottom of that. And you could just bounce and be done for the rest of the day and be like, hey, y'all later. I think, or this was 2028. You just do that and you out of it. And that was $41 in commission. you know, I'm out of here. See ya. I mean, of course, I'm gonna take more trades. Listen, y'all was giving me FOMO over there. I'm like, so many trades that everybody just grabbing up in there. Hold up, let me just grab a little something out of there too. You know, figure it out. I feel like someone stole my Christmas presents. Listen, I'm willing to take on more risk. Like it's gonna come with time. Seeing it a lot more. Things about nature, things about cars, even things about so many other things that people could run circles around me. And I'm like, hey, if you teach me how to tie that cowboy knot, for the rest of my life, I'll be able to tie up a cowboy knot when I go camping or whatever. you know, You know, you know, you know. Yeah, so just based on the way we came into this candle, and we didn't get like a wake up top and exasperated, move out, anything like that, we'd end up coming up above this high. Mark that out there. And this is not even the best part of the day. Best part of the day is about to show up in like an hour, hour and a half. I told you guys I don't do all of that. Even all of this was uh 9:30, 9:35, all this time through here through the rest of 9:30 into 10. I'm not taking any trades on that. I could find something very small and easy to just, all right, yeah, I know here I feel comfortable getting it in this. Charles is out here destroying the place. Goodness. Yeah. You see this guy Yasin out there posting his chart at 11:14 to get in at that up candle and then run the low there. Look at what that stop loss is. That stop loss is ran right in the indices section. The stop loss is ran. You can't. Some people are not going to follow the things that you tell them to do. And it's not to put anything on his name or anything, but I already had. Look at where his entry and target is. I already had that conversation about that. He was already into profit through here. Already into profit. Wherever that was. What was this? 629? Already into profit. Price came all the way down to here already. Already gave a 1-to-1 out of the zone or whatever. But we're clearly reaching into this. We didn't have any reason to go short here. And what? You post a setup, which is cool. It's fine that you set up, it's good to learn like that. But I told you the greed factor. The greed factor? You targeting a low down here and your stop is immediately right here. Because what you want to see happen, you want to see it go down here. Hey, listen, some people are going to come here and I won't be able to, effectively help. Some people are going to come here and I'm going to be able to change their mind about what's going on, change their lives with what it is that they're doing, how it is they're trading, and but I can't help people defeat themselves. Yo, Shaz is wild. Shaz, go take a break. Go take a break. Go get some water. Go get some water, brother. Yo, beautiful. So look at what's happening here. Look at what everybody's calling this. You go on Twitter. I don't know if some of you guys are from the ICDR community, whatever it is. go on Twitter, and it's a mess right now with all of this. A mess. Why? Because people are getting into entries and targeting 4%, 1.5% up here, all that other stuff, and it's just coming back to take them out. Oh yeah, I'm gonna cut right here and then leave a daily. And oh, you know what? Let me just go and get this order block because the turtle soup happened over here and traded up above this and it souped the highs. And then I'm just going to get in when it comes back here after it gets souped, and then they take it out. Rather than taking something that has clearly worked time and time and time again, and that's completely repeatable and developing boundaries within it, developing some guidelines around it. This on a higher time frame looks disgusting. Let me show y'all. Put this 15-minute on. This is what's happening since open. I told you, I remember that 15-minute candle that I used to trade with. I used to trade on the higher time frame, and I'd see the 15-minute go bullish like, and then end up going bearish. And the whole time, people sitting up in this, they get into profit, then they come back into drawdown, get into profit, come back into drawdown, while this is just doing this the entire time. This looks, from a higher time frame, this looks filthy. People trade on a 30-minute. On 30-minute, this hasn't gone anywhere at all. And that's why retail would just take a huge square and go, no trade range. Yeah, now let's play some Wordle, y'all. All right, guys, we'll come back again because there's no real breakout here, no candle down here left that price is going down to, and nothing going on here. We don't get. Yeah, let's just do this. And it makes sense just to have rules. Rules. To reach through this here, the 30 there, tapped into this little S&D here. We'll see, what we get from this, but this could also be the start of another range too. Like that. This has been since morning. We've been just mitigating one area each time we came down. Each time we came down, there's this area to the left that we just been tapping into. What is that considered? Obviously a range. And this is what I was saying about, being able to time these areas. A lot of the, sometimes when I used to take them without the confirmation, I would end up in drawdown, but it'll bring me back into profit in time to assess what's actually happening and being like, you know what, let me just get out, calculate the move correctly. I didn't even wait for any confirmations or anything. Let me just, and it gives me time to make that decision because what, I was in a zone. Or if it just happens to straight up into this region up there, that's possible too. But at least I was in a zone because success in a zone. Oh, there's a consistency rule. I know Apex had got rid of it. There's a consistency rule that they have. Oh, okay. Yeah, yeah. Yeah, I know Top Step. Um, I think with their newer accounts, they're gonna get rid of them. Oh yeah, that sucks to have that consistency rule. I mean, you remember that people grow and people grow and end up wanting to take on more risk. If they want to take on more risk, then it's not going to look like what they were previously doing before. And that's the only issue I have with the consistency. Guess it at 10:45. Oh, so this was the turtle soup thing that someone said happened on Twitter. Soups to highs, and then didn't take any lows either. Just entry on that. Bro, Joe, you was holding on to that long forever? Was it the same long from down here? The same one from down here? Oh, okay. Yeah, I'm like, whoa, you was holding some stuff. Like I said, you can see it get up into here. Take out the high, then back right here. This is the up down candle. Or for where it's at, because that is S&D there. I'm telling you, everybody gonna call this a secret destroy something. Yeah, that's why we don't add. We try to take precise entry. Oh, there's this down candle in here that noted. Technically above this, but it appears like. Hey, look at that, beautiful rejection here. I'm not saying that this rejection here, won't be a thing if you get up here, but you just got to know all the different areas. See us have these pullbacks from. It's just when you end up chasing, that's when people get wrecked. A lot of people see this drop here. They're like, oh, you know what? Let me go back. And they end up here. And then they say to me, every time I get into a zone, I lose. I do well on my live because they follow the goals. They follow the rules on the demo. Sorry, I do well on the demo, but the minute it's this or it's that. The minute I get into a live trade, it's this that happens. Because their demo trade is, yeah, we got in at a zone and took it up. Yeah, we got in at a zone. We quickly cut whatever it is, you know. And the live trading, they see this huge drop here, and they go, "Oh, you know what? Let me just take a little bit more until it gets to here," and then bam, it's in their face. So, what's the safest place to get in? No zone, no trade. $60K, yo, yo, let's go. Let's go. The wife ain't gonna like what I'm buying. Just make sure it doesn't give off the midlife crisis. She's gonna be like, okay, should I be concerned, Charles? Should I be concerned? She be trying to get you out to a shrink. Yo. Yeah, these are just measurable things that we're doing and repeating the same process over and over. You realize that a lot of people are in poverty due to wasting their time. Hey, traded right through that. A lot of people are in poverty due to wasting. So you see how after every high is taken out, we have a shift back down. Take out this high, we have a shift back down. Take out this high, we have a shift back down. This is the reason why, the breakout traders, the support and resistance traders lose a lot because they're seeing that and they're going, okay, yeah, go up above because or it takes out that high and they go, we traded out of range, breakout, we should go above and trade above the high again. Oh, it's a breakout, we above clean candle. And after every high, You see a pullback. Now watch this here as this didn't sufficiently like close above that. You still have this high and this low. Sorry, this low is not a part of it. This high got validated on the pullback, but this low has not gotten validated. The high wasn't closed. So that means that we can, you see how we got this tap in here and trade it up. That means that we get into somewhere down here and trade up as well, because even if we take out this low, it's not a validated low to, you know, consider a break of structure below, and then we should start selling. Took two shorts back to back. Yeah, I mean, on the second 5 second time frame, you'll see it happen. Look at this. People, somebody tweeted 3 hours ago, perfect time to sell. Perfect time for a higher time frame sell program. Well, yes, he is correct. He is correct because we're still, look, we took out this high here, and we're still in the same realm of that high from the left. So it could end up, yes, being the area that we're facilitating a higher time frame short from. But if people forcing these shorts because they're seeing this, they start to get wrapped up by forcing shorts coming out of those areas. 1 minute move is 1 minute move. If you're in a weekly area, guess what? You might need a week for that came around and end up being a short. FOMC is what, next week? I'm telling you, Pro Charge, that system is perfect. You utilizing, these little quick scalps, and you see that 5 gets you out. Even if, like, you see how you said you got into buy there, that 5 gets you out rather than waiting for it to go up there, and then you got to add down, add down, add down there just to get back into profit there. That 5 gets you in and out, and whether it's shorting, whether it's actually whatever's going, having that rule to say, hey, it's just 5 that I'm gonna take and get out. It now allows you to become successful with, compounding profits until you have a better idea of when to hold for longer, when not. Exactly. You can still be exactly. You can You can be wrong, but you can still be right. Exactly. Because as we're learning, you know, something's going to look like it is that going on, and it's not. Something is going to look like, yes, this looks like the perfect thing. Remember what I talked about? It could look like, yes, this is the perfect thing happening. So let me get in. And people get in, start out in profit, want more, get wrecked. Started in profit, want more, get wrecked. Crazy. Crazy. I could tell that was Sketch City and took three. Yeah, yeah. Right in that imbalance, the higher time frame. I wonder if we're gonna range on. Let's see, bounce at 23, but I think we could also drop down into 7. This is in the 30% of the down candle here. Whew. I'm probably gonna give you all into 1 o'clock because here's the 23 area. I'm gonna give you all into 1 o'clock because I'll probably be off the charts for the rest of the day. So that at least gives multiple opportunities. Formulate some sort of thing you're able to just quickly take advantage of that you've seen before, you might see happen most of the time. The 23 bounce that we talked about, bounce on the 23. 23 exactly bounced all the way up to 30. Nice. Hey, hey, you see why I say no zone, no zone, no. This is also the 23 that I talked about. This is also this that's here. 50% of this down candle, whatever it is that you justify it as. That's nice. That's beautiful. To know where to get that start, that's beautiful. You can't top that. Only I'll be right back. Clearly. But y'all see what I was saying? I said 623. It bounced right on 623. Obviously, I didn't mark it. didn't see anything of interest or whatever. But I felt like we could end up reaching back into this 16,017, the 16017. Look at how we drop right down to it, and then what? Whoops! Right back up off of it. 10 points. Just any other direction from this. So obviously it comes with experience. Being able to, whoa, 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 whoa. Obviously it comes with experience. But it gives you an area to begin to start looking. Looking for something to happen, looking, whatever it is. Somebody said, thick skin, thick wallet. I hear that. Hey, wow, this thing just, ain't this lunchtime already? What they doing? What doing over there? Lunchtime? Jimmy, you forgot to turn the stove off again. Yo, this is just like a rocket. Jeez. Yo. Bounced off the S&D to the left. Yeah, yeah. Yep. There was multiple ones created as well. There was this initial one. This is why I said team. We had what? Another opportunity mitigating area multiple times, right? We said we might bounce across here. That's when we marked that out. We also had this, red one in here, the down candle. We saw the same thing, down candle. And then when we traded down into this, tap back onto this, you see that we had this fractal form right here. You see that we traded up above the fractal, tapped back into the fractal, and then traded up again. Not just that, there's also this hidden S&D here that we traded out of, back into, traded out of it, tap back into, and then moved its way up to that. So there's a lot of reasons this even happened. But the number one reason, or the safest one for you to even use, is what? No zone, no trade. No zone, no trade. You literally just watch the tape. No zone, no trade. This was another one tap, another tap here at the 30 above this high. Right there. That's the zone in there. So is the larger one up here. This same low. That already tapped the 30 and had this huge green candle right here on the other side of the wick. This huge green candle traded off of, what is the 1205 candle. The 1205 candle hit the 30%, shifted up, and then the next candle came down and tapped at 50% of the larger zone, but within this smaller zone. So you can tap into an area that's the 70%, that's also the 30% of another area there fractal, 50 of another area there too. You could tap into that area as well And all of them kind of line up to that one thing coming out of it. Yeah, exactly. Yep, yep. The two green candles are the front right within here. Yeah. Yeah, right inside of here. Took out this high here, then to the low of here. It tapped right into the 50% of the fractal, and you saw it shoot up. So yeah, same thing. And there's this little fractal pivot in here as well. See, we already traded up above it here, above it here. And that's this little pivot that happened down below. Seeing what we're gonna do here. A little imbalance just below it. See how this candle closes. And if it chooses to fill it or leave it open, 30% of that down candle, well, 30% of the fractal, but right on top of 30% of the fractal, the down candle is there. There's just a ton of stuff working for you fractally that you can kind of say, yeah, this is complex. This is like what people think the EMA crosses over, and then the IRS, the RSI shows the divergence. Then it's under the 200-day moving average, and then it's under the out. Y'all can hear me? All right, cool, cool. You know what I'm saying? And these are the patterns of price, you know. Prints. I'm not marking this out for you guys to take any trades on it. With these, you know, here, but this is how we see it print. And that's why we see some of the people who trade these things. Sometimes they are right, you know, but they're trading the past, not future movement. Just because it broke below this trend line doesn't mean that it has to tap and retest and short, you know? Yeah, I was saying that I should have took a quick long here at 30%, but I was fixing that. Yo, Shaz is on a rampage. You gotta give it up, Shaz. Your day is done. 3 hours. Your day is done. Your day is done, Shaz. Your day is done. We're gonna come back and do this again. We got more days. We got more days. But your day is done. It's about discipline and trying to create habits around that, you know? We haven't had somewhere where we were valued so much that we were able to walk away with $1,000 or $2,000 just like couple minutes, like an hour, a couple hours, you know, unless we had to give up so much for it. But now, you know, that you value yourself that way because obviously you're spending the time in with all of this. You value yourself the same way. You also want to create habits around that, disciplined habits around that. You got to protect that because you know how it feels to spiral out as well. We all do. This is the 50%. We all do know how it feels to spiral out of control. You know, after going up good and things, you know, working out for us until it doesn't. We don't want to force ourselves there. We know what the losing streak feels like. Let's let's feel what the winning streak feels like too. We know we have rules for the losing streak, right? We also have rules for the winning streak. I think this could push up again and then trade back down to 83. So I think we could potentially get a move, you know, even if it dips down here first and then looks to get up in there and then looks to trade back into there, whichever one it does. It looks like it can give you that. It's beautiful. 608 was the 50. Already went to 618. And on a lower time frame, you would see a flip inside of here. This is whenever it is that I'm expecting, anything out of an entry, I usually see a flip in. I either want to see a bearish candle flip into a bullish candle and take out the high of the bullish candle and close, price tap into it and go. Or I want to see a down candle, the next down candle trades below that previous down candle, but then trades back up into the range. So this is a previous down candle. I want to see this candle open up and go below it like that. And then when it's time to close, the body closes back here. You know why I care about that? Why I'm saying I want to see the wick on that end like this? You know why I care about that? Because oftentimes on a lower time frame, what you guys are not seeing is that this means that there was no close below the low. That's what it means. So if you look over here, we have this down move and then we close in the wick right here. The previous candle trades below it like that, but on a lower time frame, it gave no close. So yeah, that's why I like those different confirmations for me, especially wherever it is that trade them from. I like to see that because the 1 minute is essentially just letting me know that the 15-second, the 5-second, whatever it is, failed to go below. I noticed on the 5 minute, we never closed above the equal highs. That's on one. Above up here on the 5 minute. Oh yeah, yeah. Yeah, you have this large candle that wicked up above. So you could have another 5 minute candle dip down into. So you have one large 5 minute candle, two large 5 minute candles, three large 5 minute candles. Usually we have four of them. So even if this goes from the next candle opens up and let's say the next candle bullish to bearish and then closes as a doji or something, then you can see that candle close down here and then the following 5 minute candle open up to run into the imbalance leaving that's being left behind right here. Because it's the same thing that this is doing down here. You see what I was saying about making its way back down? Back down? It would have been a nice play to get involved in. There was opportunities. Look at that. I can just do the same thing all the time. Same thing. All the time. Yeah, that'd have been a perfect hold, bro. Could have been a perfect hold, but we are defeating impulses. I mean, multiple opportunities to do whatever later on. We are trying to stay ahead of that thing that always comes around and robs us from our progress. NASDAQ oftentimes doesn't make a long like this. You see this 80 something point drop? It oftentimes doesn't make a large drop like this. Keep like running another 80 points. Usually you have another candle, whether it's from here, whether it's after the low grabbed, whatever it is, it makes its way right back up. And so that large drop is something that primes people. Oh my gosh, yes, it's falling. Let's take up a short position. This is going down. And then they go to take up that short position and they get wrecked. Because what happens after we're mitigating? What else happens after that? Now here's ICT's, macros about the Asia, whatever, getting ready to occur. By the time we've made a move like this on NASDAQ, like I said, a bounce on, what did I say, 70? No, 67, sorry. Bounce on 67. Why? Because we mitigate in this area multiple times too, based on what's back there. You have this huge drop on NAS, and then oftentimes we make our way through the low of that zone just did. And then you can see us ride right back up, ranging with back up, back, creating the same thing over here that we did over here. It's a drop that primed everybody. A wick that sweeps something to the left, and then price drops itself back into the belly of it. Beautiful. Yeah, I'm sure he's gonna show that short trade. I'm sure. Found something in here that he's able to take out of there. Might even say talk about CE or Wix. I don't know. Something. It might be something. You know. You see a huge move up after what? Lows are shifted. What did I say about people being primed to jump short out of this, not understanding that we had this fall already? And a lot of the times when NASDAQ has that, they make their way right back up. I don't know. Does that? Get a 5 minutes. Well, here goes that 1, 2, 3, that fourth candle here that we talked about. Let's see if this closes red or, but it always does this. Once I see a drop like that, I'm not primed to. I'm not like, yeah, see it go down. Nope. I know that an accumulation or some type of reverse or range of getting ready to occur. and you begin to take up trades that support that kind of environment. That kind of environment. If this, whatever this is right here, if this closes down here, this ends up closing that 5-minute candle as a bearish candle. And the next 5-minute candle can go from bearish to bullish, shooting its way into whatever there. You know, you just, and there's things y'all gonna see too that I don't see. I need y'all to know that there's some things that y'all are gonna see. You notice that I may not even have thought about. You know, I didn't code this. my fingerprints are not on. Fingerprints ain't on this. Okay. Yeah, see? Ended up as a red candle on the 5-minute. Could still attack the Asia lows. And then before you know it, be back up as, you know, some bullish candle reaching into this, you know, after. Just know that this is a hidden S&D on a high. Just this area of the hidden S&D on a higher time. Well, yeah, it is. You'd have a down. You'd have a down, you'd have another up, and then you have another down like that. And then this whole thing here is a hidden S&D from a higher time frame. When that is, I don't know what I have at 145. I forgot. Oh, that's the low. So this is where you want to pay attention to. There's this low that's down here. Higher time frame low to the left. So, you know, anytime we grab something, we have a strong move back into the area. But we also understand too, we don't get stuck there, that anytime we trade nearest to a higher time low, oftentimes trade away from it, then trade to break it. So you got to time that. You can't be short when it's going long with a high position size. You can't be short when it's going long and you have a large position, because then you're quickly going to see down by 2,000, down by 3,000, down by 4,000. You're going to quickly see that. You see what I was saying about we get another down move followed by another up move and potentially another down move again, and then could end up flipping to get back in there. What happens when we take out a higher time frame low? We have a higher time frame pullback. So that's why from whatever's happening in this area, it can be anything. I just know that this is the area to start expecting a reversal back into the upper range that it came out of. Because that doesn't have to reject down and put, even though I'm thinking that it's doing that, it doesn't have to do that. It can just run and take the high up above to the left, trade back into whatever down that provided that, and then begin to run into the higher heights. Maybe you just didn't time it, correctly. Hey, Pro Charge, you killed it for the day. You killed it for the day. It's 100% of that account, or near it, just a couple dollars, short. You killed it for the day. And anybody that got funded accounts, even if you feel like you're not ready to really excel and move forward with it, still take little micro positions. Use one micro, $2 per point, and take a 1 point move. That counts. You don't want the day you're ready to trade. The day you're ready to trade, you don't want that to be nearest to, like the day that you got to pay again, the day that, you can't even pass the challenge with the day that you're trading on because of whatever it is, the time limit rule, whatever. I told y'all we have this large drop here. Everybody's looking to jump into the short side. Oh my gosh, displacement. And suppose Nas just make his way back in. And they were targeting Asia's low from Tuesday, from yesterday. Zone to zone 100% is the key. Yes, yes. 100%. Yes. There may be a zone that doesn't hold for you, and that's okay. You're going to learn how to choose which zone through process of elimination. There's back testing, all that other stuff that I talked to y'all about. You're going to learn how to choose them through process of elimination. More and more you put up those shots, you're going to learn how to choose them. But you got to have that period of process of elimination, that back testing period. That
Order filled. Stop filled.
open this up. So this is the lowest point. take this, mark out this higher time frame. Take the low, put this high in above. There is the previous range. Though I'm tempted to use this side low, this we shift it. Okay. You see what I'm saying about this here? You expecting this rounding here, but what I was expecting is us to take out this higher time frame low. And if we chose to run this low, then you would expect a move back into the range. Sorry, that high, I'm sorry. You have this low here. You have this high that was put in here. You put in another low below right here, and you respect that high. Man, is really trying his best not to get below there and do for somebody, whatever it is. And this is, sorry, this is how these little things get created. Whether it's here or just a little bit lower, this is where you start to see. There are signs of reversals because that's the areas that price uses to accumulate. And obviously what we're looking at particularly that are responsible. So this is the zone here that you see. Traded below, tap back in here, tap back in. Yeah, the candle. Yeah, I hate to say like things that a lot of people don't know yet has them going to search out what that. Yeah, this is right inside of it. Bounce, 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 bounce. So look, this is Asia's volume over here, but Asia was just doing the same thing to come. Tapped into here, tapped into here, tapped into here, traded up, came back, tapped into here. What happens when we violate an area that we've been mitigating multiple times? We end up what? Trading below it and then what? Back into the range. That's a nice little move. Gonna get back up here. 84.
Order filled. Order filled.
Didn't even get to set my stop on it, but I was just able to set it close. I have a feeling that it's gonna move further. Right there, grab that 17. Look at this. What's the signature in this for me to even have this impulse to do this? It is an impulsive entry because again, this could still be going down below low. But what's the difference with it? Why did I feel comfortable taking that setup? One, I had my eyes on the fact that we could be mitigating this area multiple times. You can give another mitigation to it. We've seen this before. Same idea of us accumulating within here, making this pattern here. Then you also see that we trade up above the down candle that goes in there. We tap onto that. Then we trade up above this fractal that's in here. And that's where I saw this candle flip and get ready to go bullish, tapping into the 30% of the fractal. So for me, even though my entry was here and my stop was tucked behind this wick, I could quickly capitalize on a above and get out with 1700 on a little move like that. Rather than over leveraging down here and you just have to be on the right side at that point in time, especially when you're using higher contracts. The way you guys trade those lower contracts is not the same trade. The way ProCharge trades, that's the way you're going to have to learn how to trade those high contracts. Because it adds more to the trailing drawdown. If you lose 3,000 in profit on a quick snap below, y'all know how Yo, I'm gonna have to get a new mic today. This mic served its purpose, yes. I've been trying to hold on to it. But yes, this is sorry. Let me go back here. Let me go back here. I was saying that this all met the criteria for me to get in and take a trade. Mitigating this area multiple times. Mitigating that area multiple times. We traded near a higher time frame low that we know we always trade away from before breaking it, right? Not always, but most times we trade away from. I saw that the pattern was getting ready to form. You see that we close below this low, even though everybody's like, okay, yeah, equal lows, run the whatever. Look at what's actually happening in there. Look at what's actually happening in there. Sorry. We trade below this, body closes. So we trade back up to this and fail, that's fine. We didn't take this out to show that there was a change in trend. But when we traded below the low, we just put in a little wick and then trade it back up. From where? An area we mitigated multiple times. So the narrative for me is we're accumulating. I already told you about, this potentially rounding itself up, getting ready to go into the environment that's most optimal to trade in a range. So I'm looking at all of this, and then I'm observing that we traded below this low. Boom, the body broke. Traded below this low. Boom, we're just ripping through them. Wow, just full body. Wow. Just kicking the doors down with these lows. And then when we get here, still breaking the lows, going all the way up. Now, granted, these highs in here, look at the behavior. They weren't going up to test the previous area and coming down. This didn't go up to test any previous area and then come back down. So it showed that there was some slowing of whatever was delivering itself to the downside. It was slowing now. So I'm observing all of those different things and saying, hey, we're breaking with these bodies heading down. And after this long drop, then you get this little beep. So we're trading through that. Boom, 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 boom with bodies. And then we get down here and it's
Order filled.
something is going on. Something is happening that you getting
filled.
all of this. Boom, 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 boom. And then all right now. A little momentum changing over there. You breaking hard with these things and then you running out of steam. So I figured, okay, we could be making our way time.
Order
Up here.
filled.
I said 88 or something like that. I don't know what it was. Something here. But I was able to take a quick trade and capitalize on 1700 coming. A little tiny area within here. Guess what? This didn't line up with no
Stop
zone.
filled.
Most people are not comfortable take these little. Most people are not comfortable to take these setups. You know why? Because these setups are the impulsive people that take them. The people who are impulsive, the people who can tolerate a certain level of risk, they take these. Versus somebody got to see the whole dynamic, confirm, then confirm the confirmation, then confirm the confirmation that you confirm the confirmation. There's some people that are like that. So this little quick entry coming out of the 30%, the candle went from bearish into flipping into a bullish candle. And it took a quick little scalp, less than 10 points. It was like maybe 8.5. No, like 8.5. It was 67 to 76, 67.50. 67.50. Right here. To 76.25. So, 8 and a couple of quarters. Like that. Bam. All right. I'm okay with that. I ain't got to see it deliver all the way to my 88 that I wanted it to get to. Because then if it doesn't get to my 88 and it ends up coming down and take me out, I'm lost. I'm angry that happened. What? I'm upset. And then the whole day you tell me I should have just traded in Asia. I should have just traded in. Oh, I should have just. I should have just. You just sulking and angry at yourself. Work out. Why? Guess what? It did work out, but I was too greedy and it even took me out. That's the way the cookie crumbles. Sometimes people. Because chasing that, if I could just get a little bit more. And what happens if the order flow sweeps this and then trades back up to there? You were already in profit here. That wasn't enough for you? That wasn't more than when you used to just get in some more and never profit? That wasn't enough? That's literally what I'm trying to teach you. Let's see, it looks like it's keep trying to make its way up to there. But having to hold through all of this, I know that's where the emotions come through. So when you have size on this, size with this is going to cause, the same thing. You see, look at it fail. Maybe it'll bounce out of this wick here to the left, but either way, look at it fail to go up there. Now, if I was holding and not even, grateful for the small amount of points that I was able to take and the profit that I wasn't seeing just from being in a trade a couple of minutes, those poor habits is what slices people up. Those poor habits. You see, I was in an entry right here saying that price would go into this area up above here, 17 points away. I was content with being able to take 8.5 points and get out. Meanwhile, the person that wants to see it through, yeah, no, this didn't take the low, so then it has to go up and take this high up above here to the left. And you hold him because you're greedy, and then what? Bye-bye. It's either you going to blow your account because or you came out in a loss and allowed a winner to turn into a loser. Not being grateful with that. Diamond hands get cracked eventually. Yep. 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 Exactly. Yep. And there's that low there that's taken out. Still expecting to bounce after the higher time frame low. Remember, the higher time frame low is taken. Begin to see a change in order flow. This is a low that's taken yesterday. Remember the daily highs and lows? The daily targets? Look at this. Took out the daily high from here. Previous day's high. Tuesday's high we took out from here. And then Asia's low, where we opened over here, we came down, swung down to take that out. I told you this candle could end up closing as a doji. There's more imbalance that's down below here that we feel. Let me just put this here. But I told you the day could still end up turning into a bearish day. But you got to know how to read all of it. And take some time. Little hidden S&D is dropping into here. Oh, the hourly candle closes a hidden S&D. A little hidden S&D is dropping into with this imbalance here. So you're going to end up see us extend into this just a little bit more and then bounce off. What time is it? The new hourly candle. We'll see. Then we have, this is the last up candle on a higher time frame. So we know we have this area here. This is breaking that up candle. Or even up move. You see us breaking that up move down into the low here. Oh, there's a nice 4-hour imbalance. You see how the 4-hour imbalance lines up with 1-hour hidden D that's there. Why are we expected? All these areas essentially line up pretty well. So when people see all of this stuff marked out, you know, it's all for a reason. Enjoy, he says. I'll see you soon, brother. Enjoy. You too, brother. Take care. After a higher time frame low is taken, what do we get? A higher time back. You still mark out this area back here because you know that the price from. I'm going to take 2 of the areas though here. You might get another tap into here and then rejection down. Then what it's actually mitigating, which is the hiddenness. There. 2 areas. Is that area just below that up candle? Trying to figure out if I want to take a long out of here. Drops back in there. But not before this is taken. Let me see if it traded up into the, yeah, no, I didn't. Into like the 50%. No highs taken all the way down. Yeah, yeah. And again, this is an impulse entry that I was even talking about, just getting back up in here. There was no indication for me to say, yes, we're going bullish and we're going to take that out because we didn't get any as of yet. We didn't get any validated highs taken. So I would be crazy to be stubborn about an entry that I didn't even read the narrative about, with what it is that's taught. I'd be out of my mind for that. This little wick down below here, that's, I could be wrong. I could be wrong. Just think it's important that we understand the why of everything. Looks like it tapped onto the fractal. Great. Thank you. Great. Boo. Boo, you stink. Boo. I don't know. Seeing these equal highs here, would you guys still expect to tap into here? This is where you learn whether you right or this is where you learn. How do you guys learn this? How do you guys learn this? By pressing the button when it gets there. That's how you learn it. And if you're wrong, okay. Look for a more efficient setup, efficient way to trade. You listen, most of the stuff that I know is because I was a loser. I was a loser. Biggest loser. That was me. I was the biggest loser. was the biggest loser. That was me. Gotta learn some way. I know people's heart is probably beating, being in the entry of this this thing. But guess what I said? I said I'm only gonna get high quality areas for you guys to focus in on, and you guys have to make that decision. You know? You guys have to make that decision. You know this is a high probability area. You got to make the decision on if you're going to press the button there or not. And if it's not something you're sure about, okay, that means one thing. What does that mean? That means we got to go back and back test. That means we got to go back and see it more, become familiar with it more, and say, yo, I'm afraid, and I shouldn't be afraid because I see this happen all the time, and I should trust it, but I won't trust it because what? I'm not spending enough time with it. I'm not spending enough time. That's how it is with anything else. I took this little entry right here. The same little tiny entry right there. Same little entry. Which I told y'all before we went there, I want to take that entry, but not before we take out that high. We took out the high, came back to that entry, and look at that was a signal. But you got to trust it enough. And then develop a habit of utilizing these areas. Take trades on, develop a habit. And when you develop that habit, I'm telling you, it's going to work out for you in the end. Yeah, see, some of my trades got filled at different prices. This one got filled at 662.50, 662.25, 662.75. That's because it's 10 contracts, obviously, but it got filled at that, at different prices. So I can't just automatically stubble and be like, whoa. The drawdown is coming. Let me get out of this because it's 10 contracts. Oh my gosh. I gotta get out of this. Y'all don't see. You not gonna have that time to do that. You are not 10 something look at this. Look at the move. This is a 17-point move. If you encompass the whole move here, from the bottom of the wick, this is a 19-point move coming out of it. Come on. Bro, we said 5 points. We said 5 points. Come on. We already gave the narrative of why we expected, something at least trading back up into here maybe, or even, you could have just another low and then we manipulate downward and then we have a huge push back up into area. I don't know. Whichever one it is. No. But guess what? The same understanding that I had over here is the same thing that I mentioned over here. Is the same thing. Look at this. We took out this inside high right here. We took out this inside high right here. Price traded down and put in another high right here. And then shorted back below. Where it's shorting back to, if I do not have anything that mitigated this area previously, I'm willing to trade from it. If I do not have anything that mitigated previously, I'm willing to trade on it. You see this down candle formed. When we traded up above it, we wicked up above it, we tapped here on top of it, and just a little bit into it. We tapped on top of it, and then we left. So this is trading back into an unmitigated area after what? Manipulating these little lows through here. What did I have confidence in trading with? Taking an entry out of there? Oh, we just ran this little wick right here. Little tiny wick. Take something, expect a reversal. Take something, expect a reversal. Take something, expect... You guys see what I'm saying? I'm mad I wasn't even recording this, but that's okay. Here needs to be here. Yeah. But that's the way you want to develop your habits. There's a reason why you got in. All of the criteria of all of these different things are met. I told you, focus on using unmitigated areas. Now, granted, I told y'all this is the down candle, but look at what's actually there. The up-down move. No wick on the other side. I told you I don't like to take it when there's a wick on the other side. But there's an imbalance inside of it. So what did I have marked out? The up-down candle. And other people might have marked out the actual down candle, which took you to the 50% right there. When they say there's multiple ways to skin a cat, all that means is that whatever you're skinning the cat with, it has to be sharp enough to skin. There's not everything and anything you could use to skin the cat. Can't take my wallet and skin the cat with my wallet. Can't skin the cat with my glasses. There's multiple ways to skin the cat, but it still has to be something that skins the cat. So that's what I'm saying. Get rid of all them indicators. Get rid of this. Get rid of that. Y'all hear me say that. Go into structure. Go into... I sound like a broken record. Blah, 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 blah. Broken record. Oh, brother, give it up. You always saying this. But it's because I've been here already. I know what it takes. And I'm trying to get you guys to see it for yourself. You're going to see it in Asia. You're there. I can tell you this. I have no problem pressing the mouse. I have a problem. I see so many setups in smaller time frames and not in the important zones. So what you should start doing is just mark out just the areas of them. And now you have to force yourself to only take setups in the area of importance. You can see all this other stuff happening. Yes. Ooh, I could have got an entry there. Ooh, could have got. Yeah, you could have got an entry there, but guess what? Comes to your money being on that move and your level of comfortability feeling like, yeah, the risk might end up being 1,500, but the reward is times 2, 3 of that. If I just stick with this thing alone, that's the important zones. So maybe you just got to develop a discipline of clicking the button on important zones. What are zones that you want to take trades on? If your trades go five points and you're fine with that, if you want 10-point trades, whatever it is, go and back test the zone to give you that 10. When it taps into this fractal, how many times can the fractal give me that 10? So guess what? That means I have to take 200 fractal taps and see the probability of those 200 fractal taps and what it could give me. If I just want the S&D responsible, see the probability. Take 200 trades of just the S&D responsible. If I want to check out what the 30 looks like on a larger zone, see what the probability is with just 30 taps, you know? And that's something that could certainly help. And sometimes you just take one trade a day. That one trade that I was in down here, it went far more than that, but I just got up $700 because the watermark thing sometimes, the watermark drawdown. But $700 a day in one tap in a minute and 30 seconds, could that change your life? A day in a minute and 30 seconds? And if you said no trading after that, I'm done, slapped your hand, I'm done. And you have that same level of discipline. I'm telling you, every day that you come in here, we've been sitting here for how long now? A couple hours now? 3 hours, is it? Or is it 4 now? How many hours? We've been sitting there and look at all of this. There was something everywhere. There was something everywhere. If you chose to take something out of this zone here, there was 2 times the ability, 2 times for you to be able to take an entry out of there. Even if you were trying to take an entry back in here and it went through, most of y'all don't trade losses anyway. Back into there. Y'all better be trading with them stop losses. It still did the same thing, whether it's the down candle, whether it's up down thing, whatever it is. Guess what? We traded up above it. There was nothing that mitigated it. We traded into the 30% of it. Take it out. Same thing down here. Down candle that's down here. Traded into the 30% of it and 70. Took us out. Same thing down here. Down candle right in. Traded to the 30% of it and the 50. Bounce. Took you down. Now this is trading against what's happening going to the downside. That's just the side I take up entries on. I don't really take up entries short. Shorting is not really my thing, but I just if the market only provided some shorts, I'll tell you what. I'll tell you what. 3 hours and 50 minutes. Okay. That's perfect. You recording? That's what it sounds like. The recorder is at 3 hours and 50 minutes. No, I'm kidding. But we've been sitting here just reading the tape. So many opportunities to do something. So many opportunities to get in. I told you guys, I I took this entry. I told you guys before this was gonna come down here. I said this looks like an entry that I would take. I said I would want to see the high taken out in here, the little inside high, and then see us drop back into here to run up these lows. Yeah, so I had the little green line there. Look, that little green line right there. Take out that wick, tap into the up down candle. Take me up out of it. Probably give me out like one of those every day now. Nonetheless, there's so many opportunities. At some point, you have to what? Know the material and then be able to exercise the discipline. Know the material, exercise the discipline. Know the material, exercise the discipline. Know the material, exercise the discipline. That's it. Let's tap into the 70% here. Slow to dip further into that. I did tell you guys that there's this higher time frame imbalance that's down here. So yeah, this is a hidden S&D on the hourly, but this is also correlated with the 4-hour. So remember that time, the 4-hour imbalance, we opened up in the market, opened up in the 4-hour, and then the following day, through Asia, through London, we were just down there, and the following day, all you saw was in New York, coming out of that 4-hour imbalance. After what? We took out a low. So we mentioned that there was an area that we needed above in order to say we can take out high. That's this area here. So whether the rest of the session spends itself trading down here, dipping into something here, then maybe trading back up here, we know that we want to see this taken out. This is where the market came from. So we want to see that this is violated. And sometimes London will come up and violate this and trade back down there. New York could come down and sweep something below down. And then you'll just see New York start to rise on those days. And everybody's like, wait, hold up. The market's just going off. You're late. You got to factor all of that into it. You see the 70%? You see this bounce at the 70? 933, sorry. Up to what? 942, a quick 10 points. You know? And the back testing portion will don't worry about it. Back testing portion. You'll sit tight, only get used to taking that one setup that you've back tested, that you've seen happen so many times that it's undeniable. You cannot unsee it. Take that one setup, get out of the market, and learn the rest of it. And back testing, we're going to find those zones that we can find multiple opportunities on that we could, we could wait for. We know the mechanics of how they work because all do it together. That's going to help a lot of you guys. I'm telling you, backtesting is the thing that put me so far ahead of what people didn't want to do. Oh, you hit your TP in like 5 seconds. No, that's not. No, you backtest. Yes, we are backtesting. Yes, that is on the calendar. More than likely around the same time. Yes, I backtest on TradingView. You're gonna see it this week. This week we're gonna do the backtesting this weekend, Saturday. We did one last Saturday. It was amazing. Asia opened up on what? It was so many entries in Asia because we backtested Asia. So we're gonna backtest London. We're gonna backtest New York. We're going to choose different times to do that, though, because you want to back test a whole session. So y'all honest with y'all back testing these times that you don't even trade. Yes, I'm going to add. I wasn't able to save the recording. The file got corrupted because all of my files was taking up space and stuff, so it got corrupted midstream. So I'm gonna record and put it directly on YouTube right after, the same way I did yesterday. But yeah, it's gonna help you out. I'm telling you, it's gonna help with zone selection. It's people backtest stuff that they do not trade. If you don't trade in Asia, you should not be backtesting in Asia. And I think that everybody on a funded account should be trading in Asia. Everybody on a funded account should be trading in Asia, especially if you want to use size and you have a problem not using stop losses. Everybody should trade in Asia. And I'm talking about indices. About indices. You can do gold too. Gold is a little faster. But if you want to trade size with indices, Asia. Asia's not going to take you. Look at, let me. This is the Asian range here. This entire thing from this low here to where we opened into what is this? Heading into London. Look at this. In the event that I took an entry here and I chose not to use a stop loss, and now I'm being dragged in drawdown here like this throughout the time. Guess what? Asia, whichever side it is, even if it's back to here to take you up, or let's say you took a short, like somewhere here, you didn't use a stop loss. Asia's dragging you up here, bringing you up here, bringing you back into your profit here, and then bringing you back into your loss here, then bringing you back to break even. What? 1, 2, and potentially profit 3, 4, 5, 6. No, that's 6. That's 5. That's 5. I'm getting a little carried away. That's 5. Even if you chose not to use a stop loss and price got too far away from you, it always comes back. And I'm saying this because I know that there's people here that still use bad habits. So I'm saying that that little foolish way of trading that people tend to do, this is the best time to do it, especially with size. This is a range where it's almost as if you're protected. You really don't even, have any issues with potentially blowing your account. But you see how many times you could get 5 points out of this? This is Asia. Asia just ranged 22 points. 22 points. And anywhere within here, you're able to pick up an entry and at least get 5, 10, 15, whatever points you want. It's just that the candles are smaller. So guess what? Instead of waiting that one candle that taps in there, instead of waiting for the one candle to tap and then it quickly just jumps out of the area, this spends a couple candles just trucking its way up through. Couple candles. One in here, 4 or 5 candles later, another one. And you finally start to make your way up. You're trying to get out at this high. You don't run the high. You come back down here, a couple more, 12, 13 minutes later, you finally make your way up above that high, back into the same area that you just did. Just bouncing his way around. This is the way Asia trades. So guess what? If I was trading 10 contracts and my drawdown allowed was $5,000 in drawdown. At any point in time, this here would never bring you back to the max amount of drawdown allowed for trading higher contracts. Now, I'm not encouraging the use of no stop, but I'm saying that if some of y'all still struggle with that, moving your stop loss back, all these different things, Asia is so important to trade in because it provides those conditions for you. 5 points on 10 contracts is $1,000. 5 points on 10 contracts is $1,000. That should put into perspective what this 21-point range, which it wasn't really a 21-point range. After we traded up above, we ranged between 15 points back and forth. You have multiple opportunities to bank thousands of dollars. Being on the right side of the market. Or even if you're wrong, mean reversion. Exactly what Asia does. Asia has a price that it opens up at. And all you see us do is get above that price, get back below that price, above that price, get back below that price, get back above that price, get back below that price, above that price, get back below that price. That's all you see Asia do. If you guys look at the numbers to the left, take a look at it. Even if you're not charting, let's say you watch whatever, do anything, take a look at those numbers over the course of those 4 or 5 hours or so. Take a look at those numbers. You're going to see the numbers fairly, they don't go away too far from the same number that it opened up. So consider that. Consider if you do want to take those looks, but you stressed and you know, you think that it's not going to go your way and all when you trade in those higher lots, because it should be the same as trading the lower lot. People think just because on a higher lot, no. But if you're still taking that 5 and you go up 2 minis, you might be in a couple $100 in drawdown, but then you end up in a couple $100 in a couple $100 in drawdown and a couple $100 profit, or immediately in a couple $100 profit where you can close and it's comfortable to like do that multiple times in the session. Exactly. 1 mini is $100. Yes. Exactly. You can do because the mini, let's say you were chasing and you try to take this up on the mini and the mini has you here. The mini has you here is what? The mini is $20 per point or something like that? Or is it 2? Something. I don't know what it is. I think no, mini's $20 per point, yes. So $20 per point, let's say you were trying to short down to here, whatever it was. You end up in drawdown up here. You see you in drawdown by a few $100s. But oftentimes in Asia, like I said, it brings you back into an area where you're in profit, you're in drawdown, you're very tight range. especially on indices, very tight range. So trading this with size now, it's easy to pass an evaluation during this. Exactly. So you'd be around $200 in drawdown or so, but then you could also get yourself, you know, a little over $100 in profit in a lot of different entries that are up. And if you have, y'all don't want to trade with a stop because you know better and all that other stuff. If you happen to be wrong, use $200 in drawdown over here. And then you go back up $50, $75, $100. You don't have a lot of room. Well, sorry, you do have a lot of room to be wrong because you're on a very tight leash, or at least price is on a very tight leash. Now, there are some Asias where you trend, so you have to be careful. But price is on a very tight leash in Asia. So if it's on a tight leash in Asia, then all that means is that there's a lot of room to be right even when you're wrong. Even when you're early or whatever it is, there's a lot of to be wrong. Most people got these habits where I'm not going to trade with a stop loss here. Oh, and I know it's going to go up and then take out right there, you know, back into the area back there that I saw in my top analysis, wherever it is. So let me get in here. And you see what New York does? You ain't even got a fighting chance, baby. You ain't even got a chance. New York is not trying to hear that. You showed up and did what? New York is not trying to hear that. So, yes, the Asian session Apex, yes. But that's the thing. The Asian session is going to teach you to trust the zones you're selecting. Because it's doing all of this here that I'm showing you guys. It's doing all of this here, even down to the thing down here. It's doing all of this here. Guess what? Just slower. So now next time New York opens up and swipe something to the left and then trade back up, dropping the belly of the wick, because this is a wick on a higher time frame. New York does it and you spot it fast enough. Guess what? Candle drops in. 1, 2, 3. Even with just something small and having size, there's New York. So I think that it's very beneficial to consider that. I get that we want to learn how to trade, but you also got to learn how to trust the system in New York. So working it out in Asia is, you know, I really feel as though it's the best thing for you to do. Work out the system in Asia. And I feel like that's the best advice for some of y'all. especially if in New York, it's hard to trust these. It's hard to trust this in New York because what about if price just trades right through it? What about if you select this, move this, what about if you select this and you get in with a huge lot size back here and it drags you back here before finally bringing you back into profit? Or it drags you back here and it keeps going. It may be hard for you to trust that. There's a lot of people that can't trust this. They haven't seen it happen many times to trust whether to actually go short from it or not. So the range, oof, look at that. I mean, look, this flipped up above this high on the inside, gave you another push, and then traded below. That means that this higher time frame here got to close because the higher time frame, it opened up here and moved us back into here. And then by the time the higher time frame closed, we were down here. And we got to particularly get a body closure below this low. So now on a higher time frame, you're going to see a high here. You're going to see a low here. You're going to see another high put in here. And then you're going to see price violate the low down here and close. Violate the low down there and close. So where could we be looking to get into? Right here, the 50%. Even though this does seem to be a nice drop here. Yeah, so this looks like it could have another move up, down, another move back up. Then you start accumulating around. And then you can see a move back into there. But this is the perfect area to communicate, to accumulate down here. But I hope you guys learned something today. I try to talk you through what you should be telling yourself before you're getting into an entry. Show you the narrative of what's going on and how to build that narrative daily. And when we learn to build that narrative daily, that's how we could move forward with, everything else. We could feel comfortable saying, yeah, let me place 10 contracts. Yeah, let me put 10 contracts right here too. All right, yep, I'll take that 3 points. It's fine. Let me do 10 contracts right here. Okay, yeah, I'll take 2 points even. Okay. You gave me that. That's okay. And guys, when you guys are setting limit, when you guys are setting take profit and stop losses, do not set a stop. Do not set a stop. A market. So there's the sell market of touch, and there's the buy stop market. So one is to make you enter in, and the other is to take you out of the market for your stop loss. But the other is also to take you out of the market for your take profit. Both of them are markets. There's the market in on a buy or market in on a sell. Most people use market as their stop loss. Do not do it. Do not use a market as your, use the limit. It'll say it there. If you're buying, it'll say buy if market touch. So that gets you in at market price. That's fine. But when you're setting your stop loss, you're not setting a sell stop market. You're setting a sell stop limit. And if you're trading with large size and you're trading those little tiny points, sometimes when you do sell stop market to take profit after you've bought, guess what happens? It takes off a little bit from you because it's filling you at whatever the next best price is, not the price you're asking for. So you end up losing some points in that. And if you do sell stop limit as you take profit when you're buying, if you do sell stop limit, then you're going to see that it'll take you out at the number. It'll take you out at the number it is crossed for stop limit. You do not want to use stop market. You do not want to use stop market. You can do a buy market if touch if you're buying because it can quickly get you in. If price just stabs in there and gets out, it can get you in. So that's fine too. Or if you're selling, you can use sell market if touch. But when you're taking profit, you find losing a couple points on a sell, and most people do buy stop market. But if you're taking profit with these little tiny points, sometimes it can take you back out in the negative if you're doing those little tiny points. And I'm doing a lot of this because obviously this is, what I'm utilizing to trade, but this is teach you guys to do as well. I'm teaching you guys ways to navigate these funded accounts. So when you get the funded accounts, you could actually pass the challenge. You could actually get a place of payout. The payout is what you need to change your life. You need the payout. You need the payout. You need the payday. Would you mind sharing that? Oh, I didn't record this. I don't think BLT, are you recording? Do you have the recorder for this? Oh, yes. Okay. All right. All right. I didn't record this, but if you want to share, you got to make sure you let us know beforehand that you let us know beforehand. So yeah, it's fine. Just make mention to it because there's some stuff that I lost recording too. I'm recording it. I lose access to it. File gets corrupted, whatever it is, and now I don't need a way to find it and distribute it to everyone. That's what happened with the last back test. But yeah, you could definitely if you put it on YouTube or something like that, you can share it with everybody here. Yeah. Oh, I didn't realize that. I thought that was giving a thumbs up because I had answered that question. I was like, yeah, back testing. I thought you talk about back testing. Yeah, but that's cool. He got it, so he could definitely post a link. But yeah, again, this last up move that you see me mark out, it came and tapped into the 30% and it shifted away like that. Some people may not have the appetite or the energy to hold on until it finally makes its way down. Or some people can see it make its way down and then it trades right back up to their stop loss, to their break even. Because they don't yet know how to trust it. They don't know how to play it. I talk about these lines, but I also speak specifically about candles, about specific zones, about specific wicks. I speak specifically about those things. And I want you guys to be able to trust them too. But I told you these lines, the playlist, that's elementary. That's going to be very subjective to you until you learn how to define it. So it's fine to consume as a start for what you're doing, but it's not fine only to rely on that or to act as if you can just shortcut it. No, I don't need it. And then you go back to jumping in because there's a FVG. FEG is to the left. Let me jump in. Price went bullish and informed the FVG. Let me buy. You guys saw up here earlier today. How many of these FVGs held when we opened? FVG here to go short, right? Yeet, took that out. FVG here to go long, right? Get a little sauce in there. In drawdown the whole time. Get back into a little profit. Now you're like, okay, yeah, you break even then instead. Yeet, took out the short right there. FEG here. Yeah, this is the FEG with the order block and all that blah, blah, blah. Went into a little profit. Yeet, took out the high. And obviously this FVG held here. But what about the FVGs down here? Oh, this FVG here, we broke this high here. Yeet, dragged you down like that. Rain, stop, whatever it is. You don't want to get used to that. You want to be able to more. Like I said, ICT concepts are great. You know, his rules, they could happen like you saw here earlier today. They could happen and you can still get your stop rate. You're only accounting for a specific market condition. What about those days where we don't run a daily high? We don't run a daily low. How do you even trade that? How do you even trade that? When we just running highs back and forth. And it does that on FOREX all the time. All the time FOREX does this. This is one of the reasons why I didn't want to trade FOREX. And FOREX does that all the time. You can be ranging for a whole week. Look at this. From the start of the range, I don't know, let's start it here. Friday into Tuesday. So we trade up. We do not take this high right here. Well, we trade up to take this high. You expect it to drop back into here and then go and put in a high. You get in and then you in drawdown for a couple of days. You in drawdown from Friday and you finally get out of drawdown in Sunday, Monday. We don't run a low here when we trade up from Monday. Nobody knows, or a lot of people don't know how to trade this move. What did I tell you about the wick? The rules to the wick. This is just defined areas. I don't have from a higher time frame area. Oh, you need a market structure shift. You see them when they're back testing? All right, we took out these liquidity highs. We need an FVG. No, there's no FVG here on the 4 hour. No, there's no FVG here on the 1 hour. Oh, these conditions, it's very hard. And then what? FVG show up on Wednesday from the hourly. What could you do the rest of the day through here? Nothing. There's no imbalance there for you to do anything. No imbalance left behind within these areas. So you got to sit on your hands this entire time and wait for an FVG to form. All right, Luke, see you. Enjoy, brother. Wait for an FPG to form. So I'm saying get rid of that stuff because there's something else that could help broaden, your scope, your way of trading, that could make you more precise, and that you can do all day, every day. And you don't have to consider, wait, what time is it 10 a.m.? No, I'm not getting 10 a.m. Or maybe the lunch hour macro, or I can't get into anything until the 3 p.m. kill zone. Nothing. If I miss that, then I'm sitting on my hands for the rest of the day. No, that's not true. So hope you guys enjoyed today's stream. Those NQ moves. Yeah, look at it. Perfect. Yeah. Perfect. And what? What can we surmise about this high? Nobody's jumping into longs because we took this out. Why? This never put in a low to even validate this up above. So even if we get this taken out, it's not validated. So it doesn't mean that we're going long until what? We take out something that is validated. This got validated on the break of this low here. This one traded up, traded back down, did not validate. And we range within this what? The last validated high and the low that was put in. So now that we traded up here, now this is validated because we just got the closure below here. So that's when people begin to understand there's so much power in trailing your highs, trailing your highs, trailing your highs. You remain short if you're just trailing your highs. And knowing what highs belong to what time frame, all is necessary to just have on your chart every day. Necessary to have on your chart each and every day. See a little inside high get grabbed here. Bear bullish now. Let's go look for some longs going up there to the liquidity up there. This is everybody's market structure shift in here. A lot of the ICT guys, at least, this is their market structure shift. No, this gives an early indication, but this is when we're confident that we're taking that out. And what do I say you need to get above in order to be confident in taking your trade against the direction because it's an actual reversal? You need to get above the S&D, responsible for the break of the low. That's advanced market structure. The S&D responsible for the break. You need to get up above that in order to say, yeah, okay, it looks like we're shifting, we're changing from whatever it is that, whatever order flow we're currently using. We're changing from that. Look, this is beautiful. Nice little tap in here. The rejection now. Now you want to be careful of this. If we get up above this, you can see a tap back in here, and we can still get rejected from here. But ultimately, I think it would try to get up. But we'll see. All right, I'm gonna get on out of here. I'm not gonna take any more entries. We'll be back here tomorrow, same time, same place, and I'll see you guys soon. All right, later, y'all. Peace out.